Let's go deeper into the Fed's next move. Joining us this morning, former PIMCO chief economist Paul McCulley, now an adjunct professor at Georgetown. Paul, it's great to see you. What an important day. I guess the knee-jerk is that probably won't have an effect on whatever we hear tomorrow, but that long-term there are still hopes that shelter will come to play.
Yeah, I think that's the bottom line. Disinflation is well in train. The big lagging indicator has been homeowners equivalent rent. We got a really positive rent last month. We gave it back this month. So that's the really sticky component. But logic says it should be coming down as the new year progresses. It's lags, but it will be coming down. Sometimes I feel like I put out the landing lights for Amelia Earhart on this thing. But I think it is coming down, and the Fed is finished tightening. That's the big issue. The debate now is all about the timing and the magnitude of the easing cycle to come.
You don't think it's a risk, Paul, that we do have this still strong labor market and this decently strong consumer spending environment because of the labor market? Real wages are now growing. You don't think that's all a risk to inflation flaring back up?
I don't think it's a risk to reversing what's going on in the disinflationary trend. I do think it's a risk for delaying the pivot longer than the market anticipates. I think the market is going to be consistently ahead of the Fed. The Fed wants it that way. So I think that's the game that we're in now. It's not a game where we can get economic data that would change the reality the last hike is in.
So what do you expect in terms of the Powell tone tomorrow? Do you think he's going to talk tougher than the market expects?
Certainly, I think he will talk tougher when the market's pricing from the standpoint of rate cuts. But in general, I think he's going to be crafting a new narrative because they've been threatening one last hike consistently, and the dot plot will roll off the December dot, which has the one last hike. And the next dot that will become the operative dot is December 24, which shows the easing process has started. So I think he will fine-tune and recraft a new message for the next move will be an ease, but I think he will be hawkish relative to current expectations in the marketplace.
You know, Paul, when you think about Powell's pressers over the last couple of years, he really did lean in heavy when things were tough on jolts, right, on job openings and inflation expectations. We got New York Fed yesterday, UMich Friday. Why can't he be as dovish as he was hawkish back then on the same set of metrics?
I think he can be. It's a matter of choice of how he wants to shape the narrative, because I think he really does want to be in charge of the narrative, and the old narrative of higher for longer is past its use-by date. So I think he's got to have a new message, and I think that will be part of what he does tomorrow. And it's not just his message, it's the FOMC, because the FOMC is putting down a lot of markers with a new SEP and dot plot, and we'll be starting the new year, I think, with a warm and fuzzy tone, but not an urgent tone from the standpoint of cutting.